Okay, so what if you could get a real shortcut? A way to understand the financial pulse of a company that's, well, literally building the future of defense. We're talking stealth bombers, space interceptors, the whole nine yards.
Yeah, the really cutting edge stuff.
Exactly. And today, that's what we're doing. We're getting into Northrop Grumman's second quarter 2025 performance and their strategic vision for what's coming next.
Right. And it's not just about the numbers, is it? It's really seeing how global events, national priorities, how all that translates into actual growth and innovation.
For sure. I mean, this is a company right at the forefront. So our mission today, we're going to unpack the key takeaways from their Q2 earnings call, their news release, and that detailed 10Q filing.
And the goal is that you walk away with a really clear picture of their financial health, their role in security, national and international, and some maybe surprising ways they're speeding up critical capabilities.
Okay, so to really get that strategic direction, we got to start with the financials,
Yeah.
ground ourselves in the Q2 performance, and those numbers, well, they paint a pretty compelling picture.
You really do. It was a strong quarter. Sales were up, what, 9% from Q1,
Yeah.
reaching $10.4 billion.
Yeah, solid sequential growth.
Yeah.
And year over year, still up 1% for Q2. But it wasn't just the revenue, was it? Their operational side, their efficiency, that seemed to really shine.
That's exactly right.
Yeah.
The team hit an outstanding 11.8% segment operating margin rate.
Wow, 11.8%.
Yeah, what's really interesting there, it's not just a good number on its own. It's a full 100 basis points higher than last year.
A full percentage point jump year over year.
Exactly. That signals a big leap in efficiency, strong program execution, across the board.
Mm.
And because of that performance and their confidence, really, in the second half, they actually raised their full-year guidance.
Okay, across the board.
Pretty much. Segment operating income, they bumped that up. MTM adjusted EPS, that's mark-to-market adjusted earnings per share, that's projected higher now, between $25 and $25.40.
Okay.
And free cash flow, too, up to $3.05 billion to $3.35 billion. So it's not just tweaking numbers. It really shows management thinks the tailwinds are picking up.
Right, translating into better profitability projections. That makes sense.
Yeah, for investors, that's a strong signal.
So lots of positive momentum. And they're saying it's down to, what, good execution, the right product mix, and that international growth.
Those are the core drivers, yeah. Strong execution, favorable mix, and definitely significant international growth.
But was there anything else like strategic moves or one-off things that boosted these results?
There was. The completed sale of their training services business, that played a role.
Right, the divestiture.
Exactly. It brought in a $231 million pre-tax gain that worked out to about $1.04 per share.
So a nice bump.
A nice bump, yeah, but it's more than just the one-time gain, It signals management is really focusing, shedding things that aren't core, even if they're profitable, to double down on the high-growth, high-margin defense stuff.
Strategic focus. Makes sense. Like trimming the fat to be more agile.
Textbook move, really, in this kind of market. Maximize value, stay nimble.
Okay, so financially they seem, well, pretty solid. The next big question then is, what's actually driving this growth? And that leads us straight into, the whole global defense picture.
Right, and domestically, it's pretty clear. The U.S., its allies, they're pouring money into defense capabilities.
Yeah, that reconciliation bill and the FY26 budget request combined, wasn't it like a 22% increase in procurement and RDT&E over FY25?
It's a huge jump,
Yeah.
22%. And that includes specific money for existing Northrop programs, but it also kind of opens the door for new growth areas, too.
And the administration's pushing this peace through strength idea?
Right, which is basically about modernizing aggressively to deter potential threats. And a big part of that is removing the red tape, the barriers, so industry and government can actually move faster on delivering tech.
Speed seems to be the key word everywhere these days.
Definitely.
And they mentioned a specific initiative, Golden Dome for America. Northrop's playing a big role there. What's that about?
So Golden Dome is a major missile defense initiative, comprehensive. Northrop's aiming for initial operating capability within the next few years.
Okay. How?
Well, what's interesting is how they're doing it, leveraging current stuff like IBCS, that's their command system, Gator radar, the Triton drone, but also integrating new things like space-based interceptors they're testing right now.
Space-based interceptors. Wow.
Yeah, it's this layered approach. It's not just techie, it's a real shift in defense strategy, moving from just reacting to like a proactive shield using ground, air, and space assets.
That sounds incredibly complex to integrate.
It is. And that's the challenge, right? Making sure all these different systems talk to each other seamlessly. But Northrop, with their broad portfolio, they're kind of uniquely positioned to tackle that.
Okay, ambitious vision for homeland defense. But it's not just domestic demand driving things, is it? International sales are really taking off, too.
Oh, absolutely. Up 18% year over year in Q2. That's impressive. And 14% up year to date.
18%. That's not just an uptick. That feels significant.
It really is. And their international book-to-bill ratio, so new orders versus sales, is strong across aircraft, weapons, missile defense, airborne systems. It shows that momentum is robust.
Where are the big opportunities internationally?
Europe is a big one, especially for IBCS and weapons, given, the current situation. And the Middle East, they're seeing multi-billion-dollar possibilities there. Integrated air and missile defense, munitions, the E-2D Hawkeye.
Right, the early warning aircraft.
Yeah, RGM-ER, ground-based radars. It's a pretty diverse demand picture internationally, which is a good sign for their tech.
And how are they tackling that growth? Just selling products, or is it deeper?
It's definitely deeper. A core part of their strategy is partnerships, supporting local industry growth in those countries.
So like building local capability.
Exactly. It's not just selling a box. It might mean integrating local systems with their IBCS or even co-production deals, like that munitions license they mentioned with an international provider.
Smart. Builds long-term ties.
It builds relationships, supports sovereign capability, secures future business. Win-win.
All right, let's talk flagship programs. Sentinel, the ICBM replacement. For a while, that seemed like a major headache, right? Lots of hurdles. But now it sounds like there's been a real breakthrough, a restructure.
Yeah, Sentinel's seen really substantial progress. They reached a critical agreement with the Air Force on how to restructure it, which lets them re-baseline the whole program.
That sounds huge.
It is. It's a massive step forward. Signals a clear path. And crucially, that work suspension on the command and launch part, that's been lifted. They're back to work on the launch facility, the silo requirements and design.
Okay.
And their Q2 results actually reflected this. Strong Sentinel growth, plus a positive $76 million earnings adjustment, because they're more confident now about hitting performance incentives.
So Sentinel's gone from a question mark to a growth driver.
Pretty much, yeah. It's now seen as a clear, positive contributor.
And that means all three parts, the missile, the support stuff, the silos, they're all moving forward together now.
Correct. All three segments are now aligned and moving forward. And they expect that revenue momentum from Sentinel to keep going, making it a really meaningful growth contributor in the second half.
That's quite a turnaround story. Okay, shifting to the other big one, the B-21 bomber. That's been getting a lot of press. It seems like it's also speeding up towards production.
Definitely. The B-21's got strong backing from the DoD, from Congress. Its value was really highlighted in something called Operation Midnight Hammer.
Operation Midnight Hammer. What was that?
Yeah. It was a recent high-profile exercise. Showcased the B-21's stealth, its long-range strike capability, its readiness, all in a simulated tough environment. Basically proved its worth even before it's fully deployed.
Ah, okay.
Yeah.
So real-world demonstration, essentially.
Exactly. And the Air Force is committed. They're investing in infrastructure to build more per year. That reconciliation bill, for instance. An extra $4.5 billion specifically for B-21 production capacity.
$4.5 billion just for capacity. Wow.
Yeah. And now they're talking with the Air Force about maybe speeding up the production ramp even more.
Okay. What would that involve?
Well, it would mean more investment from Northrop Grumman to expand capacity further. But the flip side is it could mean better returns on those early production lots, the LRIP and NTE lots.
Risk-reward. Invest more upfront for potentially better profits later.
Classic scenario.
And long-term, what could the B-21 mean for Northrop Grumman's overall business? Could it really move the needle?
Well, yeah. Depending on how that accelerated production agreement shakes out, the B-21 could potentially top 10% of their total revenue down the line.
Over 10% from one program. That's huge.
It would be truly significant. Really reshapes their growth profile and underlines how critical it is for national security.
Okay, so beyond these massive programs, Sentinel and B-21, what else are they doing? Strategic investments to, future-proof the portfolio, innovate for the next fight.
Well, a great example is the Beacon program they unveiled in Q2.
Beacon?
Yeah, think of it as a flying mission testbed. It's built on decades of their autonomy experience. They have something like 500,000 autonomous flight hours under their belt.
500,000 hours, okay.
And Beacon lets other industry partners plug their software into Northrop's flight systems. It drastically speeds up developing and testing new autonomous capabilities.
Ah, so it's like an open platform for autonomy development.
Sort of, yeah. It directly answers that call from the administration for more next-gen autonomous systems. And it's a different way of partnering, focusing on integrated solutions, speeding things up, not just selling parts.
That seems like a really smart way to collaborate and innovate faster.
It's a significant shift in how they approach development.
What about more traditional investments, like manufacturing capacity, given all this demand we're talking about?
Absolutely. They're hitting that point hard, investing in the business for speed, getting tech to market, fielding capabilities quickly. Solid rocket motors are a key example.
Critical components for lots of systems. Right?
Exactly. They've put over $1 billion into SRMs in the last 6 years, improving capacity, flexibility across different facilities.
$1 billion just on rocket motors.
Yep. Places like Allegheny Ballistic Lab in West Virginia for small motors, Elkton, Maryland for medium and hypersonic motors. It directly feeds that huge demand for tactical weapons.
And didn't they just get a big Navy win for rocket motors recently? Something about speed?
They did. The Navy picked them for the 21-inch second-stage motor for extended-range missiles. And the kicker, they developed and demoed it in less than a year.
Less than a year. Wow, that is fast.
It shows their agility. And overall, they expect annual SRM production to almost double, from around 13,000 units now to 25,000 by 2029, all sizes.
25,000 units. Okay.
And in space, too. Investments at their Bacchus facility are helping build out the Kuiper satellite constellation, cementing their role in, emerging space stuff.
So these aren't just small tweaks. These are major capacity expansions.
Big investments. It's about making sure the U.S. and allies keep that decisive edge.
Okay, so pulling back to the big picture, we've got program successes, strategic investments. How are they positioning for long-term financial health? And shareholder returns, what's the outlook?
Well, for the full year, they tighten up their sales outlook slightly, expecting organic growth around 3%, but they're projecting a big jump in sales in the second half compared to the first, $2.5 billion more.
$2.5 billion more in H2. Where's that coming from?
It's driven by those triad programs we talked about. B-21, Sentinel, Columbia sub-program, plus new ramps like Takamo, IBCS, those international radars, ammunition, and just normal Q4 seasonality helps too.
So a clearer path to a strong finish for the year.
Seems that way, yeah.
And what about shareholders? Are they getting rewarded for this performance? Or is it all going back into the business?
No, they're definitely focused on returns. They expect to return about 100% of free cash flow this year through dividends and buybacks.
100%. Okay.
They already bought back nearly $900 million in stock in the first half. Shows confidence in their own share price. And maybe more importantly for income investors, they announced a 12% hike in the quarterly dividend. That's their 22nd year in a row of increases.
22 consecutive years. That's consistency.
It is. And it works out to about an 11% compound annual growth rate for the dividend over the last decade. So a very reliable dividend grower.
Good to know. Okay, finally, there was this thing called the One Big Beautiful Bill Act, OBBA. Sounds interesting. It affected their tax situation. How did that play out?
Yeah, OBBBA. It's a bit complex. What's interesting is it has good news and slightly less good news for them, short term at least.
Okay.
The good news for cash flow, it repeals that mandatory capitalization of R&D costs. Basically, they can fully expense R&D again starting in 2025.
Which is how it used to be, right? That capitalization rule is unpopular.
Exactly, so full expensing is back.
Right.
But OBBA also tweaks some R&D tax credits. The net effect is their estimated tax rate for this year actually goes up a bit into the high 17% range.
So higher tax rate offsets some of the good operational performance.
Partially, yeah, on the income statement. But crucially, that R&D expensing change, it gives them a cash tax benefit of $200 to $250 million for 2025.
Ah, okay. So higher rate on paper, but better cash flow next year from the R&D change.
Right. And the bigger strategic piece here is that R&D expensing change really incentivizes them to pour even more money into innovation because they get the tax break much faster now.
So it encourages the very thing the government wants them to do, develop cutting-edge tech faster.
Precisely. It's not just about the cash flow numbers. It's a real catalyst for future R&D, future growth, staying ahead technologically.
So, okay, wrapping this all up, when you look at a company like Northrop Grumman, what's the big takeaway? It's clearly way more than just, building planes or missiles.
Absolutely. It's about navigating this incredibly complex, fast-changing global landscape. It's about innovating at, frankly, breakneck speed. and making these huge calculated bets investments that are literally reshaping defense for decades to come.
It really makes you think, doesn't it? In this era of just constant technological upheaval, shifting geopolitics, how many other industries are going through something this fundamental at this kind of scale?
It's a good question.
And maybe, how can digging into stories like this, understanding these deep dives, help you spot that next big wave of change, not just in defense, but maybe closer to home, in your own world? Something to chew on.